There is a lot of panic right now in the Tesla community, well, because of what happened recently with layoffs and all that kind of stuff, even though when other companies do it, it's not that big of a deal, but when Tesla does it. Anyways, I don't want to open that can of worms because apparently it is a can of worms, but there's a lot of panic right now. And a lot of investors are seeing their portfolios when they're holding Tesla stock keep going down and down. It's like a meme, right? Tesla stock is like a meme right now that you bought the dip and the dip keeps dipping. That's what the meme is, and that's what Tesla stock is right now. But what's really important and what we have to understand is that we invested into Tesla stock for the long term, right? I mean, I hope that's the case. We didn't invest in it because we thought that we're going to get rich quick because, yeah, that's not going to happen. But Tesla stock is a long-term, it's a long-term investment. And what's important right now in these cases is to sit back, zoom out, and take a look at the fundamentals because that's what's important right now. We have to look at Tesla's fundamentals because in the long term, it's the fundamentals that's going to make Tesla or any other company a weighing machine. Because right now it's a voting machine. In the long term, personally, I do believe with all the innovation that they're doing, with all the projects that they're doing within Tesla, and how they are in their own industry and what other industries they're going to create, because they're going to create it, it's going to be a weighing machine. But let's step back and let's take a look at the fundamentals because that's very important and we have to, and it'll make us reassure our investment and see what we are investing in because this is, again, fundamentals. It's a long term. It gives you a better understanding of how Tesla will be in the long term. And I'm using this mega charts here because their visual is amazing. And I'm very impressed on how they present the data to us. It's like looking at the income statement, their cash flow statement, their balance sheet, but in a chart. And it makes you understand so quick. Even though if you're not into economics or finance or looking at these income statement sheets, the boring stuff, right? These charts, well, they're interesting to look at and they give you the right answers. And I was so impressed with this that I had to sponsor this. I really had to sponsor this. And you guys can click the link in the description. It's the first link there or the first comment there. You guys get 7 days free. And if you guys do want to purchase this, whether it's monthly or annually, you can use the 10% coupon code Pejjy right here. You guys can use that. But let's get down to it because this is a sheesh moment. And smash that like button and hit subscribe if you haven't already. Let's go. So for the fundamentals, guys, we're going to be taking a look at a few things. The universal KPIs, insider trading is really not that important, but it does give us some clue of what's happening in the company with people who are holding shares and stuff like that. Cash and balance sheet, which is important. Dividends, well, Tesla doesn't have any dividends. Ratios and unique KPIs, which is going to be very interesting things that I, want to show you guys because unique KPIs are things that I personally requested these guys to make and shows the actual fundamentals of the company. But let's go with the universal KPIs with the income statement, and you guys can see since 2016, the revenue, gross profits, and operating income is to the right and up. And yes, there is some consolidation right here with the revenue and profits. I mean, if we go ahead and turn it into yearly, we can see the growth is there. But what's more important is we got to zoom out to 10 years or max even. And you guys can see that in 2008, 2009, 2010. I mean, this thing IPO'd in 2010. And you guys can see in 2011, 2013, 2014, it was nothing. It's nothing compared to now. And I'll tell you guys this. I can promise you guys this. Obviously not financial advice, but I can promise you guys this. This massive bar you guys see here in 2030, the 2023, 2024, 2025 bars are going to look like these. That's all I'm going to say right now. That's all I'm going to say. But what's more important is the fundamentals are saying this. Tesla is growing in revenue and Tesla is growing in operating income and gross profits. Now, yes, 2024 and maybe even 2025, it could be flat. It could be flat. However, though, I can promise you that once the energy has been ramped, which is ramping, once interest rates do go down and other macro environments have relaxed in 2026 and onwards, I'm pretty sure we're going to see a massive growth. That's all I'm going to say. But the fundamentals show that every single year Tesla is growing. Yes, revenue in 2024, even in 2025, even though income is not going to be, it's going to be lower, revenue is going to continue rampaging high. I think I'm forecasting for 2024 for this to be around $110 billion in revenue. That is what I am projecting for 2024 on my forecast. Now here is the another interesting thing for the net income. You guys can see net income has been pretty much flat since 2022. Well, it peaked in December of 2022 or the fourth quarter of 2022. But if we look at Q4 of 2023, $8 billion in net income. Now, to their credit, this is about $5 billion of it from their tax losses from the previous years. So if we remove that, it would be just above $2 billion in net income, which is more than Q3's for sure. But I'm pretty sure end of this year's quarter, they'll have something like that as well to bring it on to make the, net income looking really good. But the point is, guys, if we go ahead and click max quarterly, look at all these quarters that were just in negatives. It wasn't positive until we reached pretty much 2019. And that's where the stock roared like 20x. And I think this will happen again once we see Robotaxi and EPS going high like crazy, because now you can actually value the company. But the message is clear, guys. Let's switch this to a yearly. Look at that. It's growing. Now, yes, again, 2024, 2025, I do think we're probably going to be around 10 billion unless Tesla pulls another rabbit out of their hat. It's going to be in between the 10, 11 billions around there. But once the other parts of the business start growing, like the big risky things that they are risking on, that they are, betting on and investing in, is the robotaxi and stuff, these numbers are going to be nothing. They're going to be nothing. They're going to be like over here. They're going to be like 2020 numbers. That's all I'm going to say about that. This is what we want to see, up and to the right. That's all we want to see. If we go to growth section here, the growth section was very interesting because the quarterly, if we go to max, we can see that in revenue, Tesla grew 1,800%. If we go ahead and look at the stock at that time, clicking on max, in 2013, the stock rose about almost 400%. The stock rose almost 400%. So, and that was because of revenue growing 1,800% in that quarter, in one quarter, well, in two quarters really, but in one quarter up 1,800% and operating net income growing about 100%. And then the stock stayed flat for a long time until the operating margin or operating net income went up almost 800% in 2020. And we all know what happened here in 2020. Boom, went up here and then it just continued to rocket up. Went up 1,800%, which is absolutely insane at that time. And here's the thing with Tesla stock, guys. The behavior of this stock is like this. It increases in revenue and then it stays flat. And then it pops in revenue and operating income and then it stays flat because Tesla is innovating so much and reinvesting back into the company. For crying out loud, they're not even doing any buybacks or dividends because they're just pouring money back into the company. They're innovative. They're not like Apple sitting and just collecting the money from all the hard work they did. This will be Tesla in 10, 15, 20 years from now. Right now, it's keep reinvesting, keep innovating, and be on the edge, be on the leading edge. And that's why you can see Tesla just popping up every now and then. The next pop, I think, will happen in 2026, 2027, around there. But check this out, guys. After that, revenue continues to grow year over year, while operating income has been going down for the past 2 quarters, but it's not a big deal. It's really not a big deal if you look at it at a long-term view. Again, if we look at it at a yearly basis, it's just a big flat line. You guys can see, look at that. 225% 2021, 112% in 2022, minus 35% in operating income growth in 2023. And I think, of course, 2024 will be minus as well. Maybe 2025 as well, but then 2026 and onwards, it's going to be it's going to be interesting. Okay, that's that. When we move on to margins is also very interesting. If we go to max margins, look at that. In the green, guys, free of cash flow was negative, operating was negative, gross was negative. Now, if we go till now, well, operating is 8%, gross is 18%, and free of cash flow is 8%, and it's been consistent, or at least in the positive for some time. If we go on a yearly basis, I mean, it's just a massive big flat line. 10 years, if we go look at 10 years, you guys can see 9% operating, 18% gross, and 4.5% in free of cash flow. Operating income and operating expense, I mean, this is also very important. It is a key part of Tesla, but it also shows you where they are investing their money in with the operating expenses. If we look at the max, we can see for almost all Tesla's life, operating expense was way ahead of income, if they even had any. They're actually minus in there. And let me just go ahead and put it on yearly because it's much easier to see. You can see operating expenses more, but now it's been tied up. And I think this will be the case for 2024, 2025. Maybe this year we might see operating expense a bit higher than the operating income. Maybe this year we'll see. But Tesla's going to continue to invest and innovate. And this will obviously increase the operating expense. EBITDA was something that I don't really look forward to. I don't really care about EBITDA. But again, up and to the right, except for 2023. And of course, I think it'll be flat for 2024 and 2025 until we start to see another growth. But this is the universal income when it comes to universal KPI for the balance sheets at the moment for all the years. This whole chart sums it up and to the right. That's what it is. Now, I want to show you guys the insider trading because that's what indicates what's going on with Tesla investors inside of Tesla itself. So as you guys can see, as soon as we had this massive spike, obviously we had more people selling Tesla stock than buying. Going to max here, I mean, not much. It doesn't really give us much. And CEO transactions, obviously Elon's been selling every single quarter in 2022. We don't have any 2023 data because he didn't sell any, but he did sell heavily in 2021, well, mainly in 2022. But that's insider trading, cash, and balance sheet. This is also a very important part of Tesla. You guys can see in the balance sheet, again, I want to go to yearly here because yearly is more important and go to max. The red is total assets. I mean, just look at that. Total assets can pay off their total liabilities twofolds. That's more than twofolds, which is insane. This is a lean company. And you guys can see here at the bottom, if you go to yearly here again, for cash and working capital, $16.4 billion in cash. Now, obviously, they have almost $30 billion in cash, but this is cash and working capital. So it's a little different. But both chart is clear. It's up and to the right. And that's exactly what we need to see, mainly for the assets and equity. Equity keeps growing every single year for Tesla. And that's important. That means our shares are worth more. Dividends, well, obviously, Tesla doesn't have any dividends. Ratios. This one is very interesting because it shows you the earnings per share, the revenue per share, PE, revenue per employee, debt to equity, price to sales, all these really interesting data that can really help you purchase a stock or just see where the company is. But this is part of the fundamentals. So earnings per share, again, look at that, $2.27. But again, that was because of the tax loss that Tesla got from the government because that's what happens when you file a loss all the way back. I think it was all the years prior to 2019, I'm pretty sure every single year they were like filing a loss and now they're getting a tax back from it. So they benefited here. And realistically, this would have been around 65 cents, right? 66 cents. Nonetheless though, earnings per share, $2.27. If you go to yearly and go to the max, up to the right. That is what is important. Now, 2024, I think this is probably going to be $2.50, $2.40. So half of that going back, well, more than 2021's for sure. In between 2022 and 2021, it's $2.50 for this year. I think 2025 will be absolutely better, but that's what's happening. Revenue per share. So how much revenue per share there is. I mean, this is not that much of an importance, but on a quarterly basis, about $7.19 billion or $7.19, not billion. And we have $27 or $28 when it comes to 2023. This is not much of an important metric, but as an interesting metric. Price to earnings ratio. This is the PE. And if you guys remember, PE of Tesla reached almost $1,000. I think it reached at 1.1200 into 2020, which was absolutely insane. Let's look at it at a yearly, what it is right now. 52 right now, but this is based on Q3. This is not updated right now. This gets updated every single quarter. So end of 2023 or the last quarter of Q4, around 52, 53 PE. Right now, I think it's mid 30s right now with the PE. And this will continue to go lower because Tesla stock is in the 150s right now. So I think this will go lower as well, but it shows you the price to PE, shows you price to earnings ratio, which is pretty interesting. Revenue per employee. Now, this is pretty interesting because lately Tesla just laid off 10%, and we can see, what is it, per each revenue per employee, it's around $756,000. This is probably going to get boosted up to in Q2, not Q1, in Q2 maybe. Or if we're doing this quarterly, maybe this is going to get bumped up to maybe $250,000 per each employee. Let's see. But this is interesting data to know. Like, wow, in 2023, revenue per employee was almost $757,000. Interesting to know. Fundamental thing to know here is debt to equity. This is extremely important to know because it's only 14 cents. This is how lean Tesla is. 14 cents debt to equity. Crazy. Compared to if we go to 2012, it was almost $4, which was just, $4 where and 13 cents where. Absolutely crazy. Price to sales right now, Tesla, well, in Q4 of 2023 was around $8. Right now, I think we're just at 6 or below 5. We need this number to go lower to be better, like how we saw in 2019 Q2, $1.60. This was a very healthy price to sales ratio, and anyone at that time would be like, okay, this is pretty cheap to get into. But at the same time, at that time, people thought Tesla was over and it's going to go bankrupt. So, you have these two watermelons to jug with. And what do you do? And for Tesla, if we look at it on a yearly basis, and if we look at the max, it doesn't really go below, $2 or 66 cents, 67 cents. It does stay stable in the $9, $8 range, which is somewhere what happened in 2023. Again, right now it's around $6. And this was the ratios. It's pretty interesting. Some are important to know, some not so much. Some is just good to know. But there's definitely a lot of fundamental things to know here, like price to sales, PEs, and debt to equity ratio. Definitely important. The unique KPIs, and this is important because some of the things here I have requested and they did it. And so let's take a look because some of these things are very important for the fundamentals. So first of all, vehicle deliveries. So vehicle deliveries in 2023, again, I'm going to go ahead and just zoom this out all the way to 2011. And you guys can see, obviously, vehicle production was around 1.85, not 1.8, but nonetheless, up and to the right. Exactly what we need to see. Automotive sales revenue. Again, you guys need to see this. 2023 was around 79 billion. Just autos, huh? This is just autos. And look at that exponential growth. In 2023, I do think this is probably going to come up to maybe 85, maybe 90 at the max. At the max, because we're not seeing that much high deliveries for 2024. In the energy sector, which I do think we're going to see massive growth this year, is, just look at that. Look at that. Stability, 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 boom. Stability, and then boom. And then boom. And then boom. More than doubling from 2022 to 2023. I do think we're probably going to hit around 25 gigawatts, somewhere around there in 2024. And this is going to continue growing, especially when the Shanghai Mega Pack factory comes out. That's going to help a lot. Deliveries. Again, deliveries is interesting to know because that is the bulk of Tesla's valuation right now. Even though as a Tesla investor, long-term Tesla investor, I don't really care about the deliveries. I care more about the FSD take. That's more important. But you guys can see the exponential growth, 1.8, a little over that delivery. This is correct data. We can see 2024, I think it'll be just below 2 million at the worst case scenario, around there. So 2024 will be just right here, just right there. And then 2025 will be a bit more than that, 2.5, 2.7, depending how the macro environment is. Services and revenue. This one is under the radar, but Tesla is growing in this as well. $8.3 billion in the revenue for 2023, and will continue for 2024, maybe reaching in the 10, 11, or $12 billion. Supercharger station. This is awesome because now, obviously, I think, here's the thing, guys, with supercharger stations. Since now every other car maker in North America can use Tesla supercharger network, I do expect Tesla to create a few $1 billion in terms of revenue and profits in the long term in 2030, 2035, because they are the gas station. Tesla has become the gas station for EVs in North America, and I could see this happening in other parts of the world as well. But take a look at this, guys. From 2012, they only had seven supercharger stations. 10 years later or 11 years later, just below 6,000. And in Q1, as of today, it's over 6,000 right now. So this is going to continue exponentially growing. I wouldn't bet against that. This is just insane. Energy generation and revenue we have here in revenue as well. Look at that. 3.9 billion in 2022, over 6 billion in 2023. I'm expecting a little over 8 billion in 2024. So this is going to continue exponentially growing, especially when we keep adding mega pack factories all around the world. And going back to superchargers, here are the connectors, which aligns with the supercharger station. And we go back to 2017, because 2017 they had 1,075 stations. 2017 they had about 9,069 supercharger connectors. And up till Q4 of 2023, 55,000 supercharger connectors, almost 6,000 supercharger stations. So the growth is insane. It's there. And here is the most important chart as a Tesla investor: the FSD miles driven, the data that Tesla collects. Now in Q4, we had 750 million FSD miles collected. Recently, Tesla just said this in April. Look at that, 1 billion. And it won't be too far or too long until we reach 2 billion. And the more data we have here, the sooner we can get Tesla to solve or complete the autonomy, which now they're going to be unveiling the robotaxi on 8/8, which is insane. But this is amazing. For me, and I'm pretty sure you guys watching this, you guys can see the fundamentals of the company. It's in the right direction. It's going to the right places, up and to the right. Yes, we may see a couple years of just stagnation, but it's just part of the business cycle. All companies have a level of stagnation or a little bit of flying off until they are going back up. What's important here, guys, is that they are continuing to innovate, continuing to make money, which Tesla is, and continuing to reinvest back into the company. Amazon is one of the greatest examples when it comes to comparing what Tesla is doing, because they keep reinvesting so much back in the company. And that's exactly what Amazon is still doing till today. As soon as they lay off a little bit of their investments, you know how much profits they can make? With Tesla, with their FSD, the robotaxis, and their next generation vehicles, and once interest rates do go down and the macro environment gets better, there's no doubt that Tesla is going to be roaring again. But again, this is my thoughts. I mean, the fundamentals say this, but it's up to you to make that decision. As you guys know, I'm going all in into Tesla stock, and so I'm buying more in these shares. I mean, I'm slowly dollar cost averaging in. But anyways, I hope you guys understood the fundamentals of the company using the mega charts. A shout out to mega charts. And again, if you guys want a free 7-day trial, you guys can click the first link and use Pejjy to get 10% coupon code after the 7 days trial. In the meantime, guys, retiring off Tesla stock is something that I'm doing, and I made an updated video. You guys can check it out right here. Obviously not financial advice, but check it out. You won't be disappointed. Guys, get your I bought the dip t-shirt or she short. It's a way of supporting me, and subscribe, and I shall see you guys in the next video. See ya.